Hi there, welcome to GrainTV. It's Thursday, May 5th, a down day in the grains. Let's take a look at the grain hedge trading platform and see where we closed. In Chicago, corn lost 1.5 cents a bushel, wheat lost 8 cents, and beans, the big loser, giving up 21 3/4 cents. Trading this high on July at 10.47 before closing the day around 10.12. It was a wild ride in beans, and we'll get to the reason why here in a minute. But first, let's talk about some of the other news out there, and let's start with wheat. The Quality Council tour in Kansas wrapped up today, and not surprising given what they've been reporting the last few days, they see massive yields in Kansas. Their estimate for the Kansas wheat crop is 382 million bushels versus 321 million from Kansas same last year. So in essence, even with a big drop in acreage, the yield is going to be very strong, and that is bad news for wheat because we already have more than our fair share of wheat in the U.S. as well as the world market, and that's pressuring prices as we discussed yesterday. Other news, crude was up sharply starting the day. We were up as much as $2 a barrel on news that Canadian wildfires in Alberta were going to shut down some of the plants there and some of the fracking operations in that part of the world. So that got the market really excited, but we still run into the problem with crude that there's ample supplies. You know, the U.S. Inventory data from Wednesday was very bearish. We have OPEC that's going to be increasing production. So it's really hard to keep this bull market going in crude, at least for the time being. So even though we were up $2 a barrel at one point in crude, we were only up 30 cents as we got closer to the end of trade today. And the other thing that was weighing on crude was the continued recovery in the U.S. dollar. We were up 3 days in a row now, and today was particularly sharp with the U.S. dollar index gaining 0.6%. But let's take a look at Thursday's USDA export sales. This is always worth watching because it's the major focus on the demand at this time of year. And what was disappointing in this report was corn in particular. We came in on the low end of old crop expectations with only 769,000 metric tons being sold for old crop versus 750 to 1.1 million metric tons, which were expected. So that's disappointing. The other thing disappointing, and this is extremely disappointing, only 60,000 metric tons of new crop business. So overall, that was really disappointing for the corn market. And wheat as well, coming in at a respectable 179,000 for old crop, but new crop very low at only 140. And again, the problem with wheat is we are not competitive in the world market. We are $32 a metric ton higher than French wheat. And even with the decline in the U.S. dollar over the last few months, we've lost 6% in value in the U.S. dollar, but our wheat is well too expensive to be competitive in the world market. Now, the positive news was soybeans. Here we saw 816,000 metric tons of old crop, well above expectations, 400 to 600,000. And new crop also above expectations, 430,000 metric tons versus expectations of 200 to 400. So what caused the bean market to unravel today? There was a rumor floating around. Initially there was talk that China was going to cancel 5 million metric tons of sales, but instead what they're actually going to be doing is releasing 5 million metric tons from their domestic reserves into the auction market system so that they can basically limit the impact of Argentina's crop loss. Not surprisingly, 5 million metric tons is what China's releasing, and right now the estimate for Argentina's crop loss is around 5 million metric tons. So that is a big deflationary factor in the bean market, and beans took it hard today, and I wouldn't be surprised to see this start to trigger some more selling because we've sort of run out of bullish news to keep this market aloft. Let's take a look at the 4-hour bar chart from our grain hedge trading platform. And if you're a trading client, you have the ability to look at charts in any time period you want, whether it's 1-minute bars, daily bars, weekly, continuous, doesn't matter. But this happens to be a 4-hour bar chart, and I'm showing this because it shows a particularly interesting pattern here. And if we go to the recent highs. You can see 1046 was the high back on April 28th. Most recently, we had 1055 as the high on July beans. And then today, after the release of that export announcement with bullish numbers for beans, we tested 1047 again, but quickly sold off and started to sell off rather abruptly. We traded around that 1023 mark, which happened to be the 50-day or the 50-period moving average on this 4-hour chart. And we held that level for quite some time. But as this rumor on China started to gain some speed, then we started to see more active selling and really sold all the way into the close. So if you think this is a head and shoulders formation, then that points to a price potential on July beans of 985. That's a far cry from the 1055 mark we were just a few days ago. But again, the fundamentals are shaping up to not be supportive of any sort of more bullish news here. And with this China announcement, yet to be confirmed really, but I've talked to a number of people who said that it is in fact true, traders alike and hedge funds alike. And so to me, it seems like a very prime opportunity for farmers to get aggressive about marketing some of their old crop beans or potentially locking in new crop beans, with new crop prices still hovering above $10 on the November futures. If you want help and need assistance in your trading strategies or your marketing strategies, give us a look at grainhedge.com and sign up for our free trial of our trading platform and our morning commentary and our technical alerts so that you can be informed about what's going on, like these deals in China. That's all we got for today. Join us tomorrow on GrainTV and we'll be discussing the weekly wrap-up. As a GrainEdge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at GrainHedge.com to become a client.